This is our Forex blog for February 14th, 2014, and these are our currency indexes, which let you see what currencies are strong and weak. You can see the dollar as a chart, pretty much going down underneath its hourly all day, breaking the previous day's low. You can see the yen was strong and then broke down underneath the hourly and went sideways. Clearly the pound is the strongest, and this has always been one of the easiest ways to trade, at least until our new Forex signals came out. You clearly can see the dollar's weak, the pound's strong, but you don't even have to do this analysis. Just load up our range charts. I recommend 5 pips per bar. Put our Forex signals on there, and just wait for a signal, get in, and when the stop gets hit, you get out. So you have a sell here, pretty much broke even, maybe lost 2 pips. You got in on this trade here at 60, got out here with a nice 48 pip profit. You went short, you made about 10 pips. You went long here, pretty much lost 3 pips, made 5 pips, lost 8, probably lost 5, made 8 to 10, made 30, made 15 to 20, and then made 20. The euro didn't do quite so well because the euro was a little choppier, but you can see you lost 5 pips here, lost 5, and then made about 10, 20, 30, made 15, lost 4. The wins are bigger than the losses, and the losses, there's more. Typically, my goal is to have more wins than losses, but I'm focusing on taking trades that are likely to give us 3 times bigger profits occasionally than what our risk is, and try to get in on those big moves and stay in it. And if the market's super strong, then we buy little narrow pullbacks. If it's up too much, I have rules in there that require a deeper pullback. That's why we didn't buy it right here. So towards the beginning of trends, I have more lenient rules, and then stricter rules as the market goes up, a considerable amount, either with a decent pullback or time elapsing. If the market spends enough time from that previous swing high and doesn't go underneath the previous swing low, then it becomes safer to buy. There's a lot of rules in here, and I could spend years teaching them all to traders, or just teach them to the computer and have the computer analyze millions of there's millions of calculations that go into our statistical models, and it analyzes all the swings, analyzes all the currencies. Now, if you want to manually trade, you can certainly do that too. It's always going to pay off to use our signals as well. But you can, with the pound, you saw that it was strong. The yen became weak later in the day. The pound yen was one that you could, especially after 3 o'clock right here when the yen started going down. After 3 o'clock, you can certainly look and focus on buying pound yen trades. You can see it went up, buy the pullback, it went up, buy the pullback, it went up, buy the pullback, it went up, and so on. And that's how we've always traded with our currency indexes and currency meter. Let's take a look at some other currencies here. You can see the Australian went from underneath its hourly to above. Its weekly and monthly trend is up. This is a pretty decent trade right here at 3 o'clock. You wouldn't want to trade it against the pound because it's strong, but the dollar is weak. So the Australian, you want to look for buys in the Australian dollar after 3 o'clock and even before 3 o'clock. But you can see right here, broke out over its multi-hour high and went up about 45 pips. And really, if you miss that trade, you really probably want to draw your fibs on there and wait for a minimum pullback. Super strong currencies. We now have, I think it's a 23.6 area. If it gets underneath that area, typically it's okay to buy. So you might have bought here and had a small loss, small win, nice win, nice win. And usually buying 50% pays off, especially when there's a little double bottom right here. So that trade right there from 15 went up 20 pips in the next 2 hours. Let's try to find another currency here that's weak, the CAD. And we already know that the pound was one of the strongest currencies, so you buy the pound CAD. It's not rocket science, it just goes up, you buy the pullback, goes up. And fib targets are great places to get out with your profits. Not only are they a great place to buy, 50% pullback, they're a great place to get out. Notice it took it about a couple hours to break through this high, and it failed, and then it went up to the next fib target, and that was the high of the day. So you pretty much, most of the time, probably 75–80% of the time, know where price will go, especially these strong trends. Trends that are not quite so strong do not make it usually to the fib targets, especially the second one. But use our currency indexes, make it easy on yourself. Use our Forex signals, and that's pretty much all you need to do. Focus on getting bigger wins than losses, not so much on winning percentage, but if you use our tools, your winning percentage should be okay, 40 to 70%. In that range is good. It doesn't matter even if you're 30% winning. If you have a ton of break evens and small 3 and 4 pip losses, and your wins are, you catch a few 20 to 50 pip wins, you're going to be fine. So winning percentage does not matter. Focus on catching big wins in these strong trends. Even if you get 1 or 2 big wins and you have a slew of small losses and break evens and small wins, you're going to do great.